And we're back. We're moving now into our second segment for the morning. And this one surrounds DFC. How are things like, especially amidst a pandemic? So that's exactly where we're going. The role of DFC amidst the pandemic and the promotions of their products that they've got. You just saw that lovely ad on the TV a while ago, infomercial actually, on the TV a while ago. And we've got the folks in to tell us all about it. The general manager is in with us. That's none other than Miss Natalie Goff. It's nice to see you. And of course, the chairman of DFC is in with us, Henry A. Anderson. Guys, good morning.
Good morning.
And welcome. It's nice to have you in.
It's a pleasure to be here.
When we hear DFC, Development Finance Corporation, folks might look at it from a different standpoint of exactly what it is supposed to be. We might not even know or understand what DFC is or how we could utilize the products. Let's start there, Ms. Goff. What is DFC? What does it stand for, and what do you do?
Okay, Development Finance Corporation, or DFC, is this country, Belize's only development bank. And what's a development bank?
Yeah.
It's different from a commercial bank, from a credit union. It's one of the key players in the financial services sector. The primary role of a development bank is to take higher risks, to fill market gaps that may be there. One of the things it does, and what gets it into trouble, is that we do what we refer to as counter-cyclical financing. So when people are pulling back in giving financing in a pandemic, in a crisis, that's when the development bank is supposed to go in and try to see how it could, in this case, restore jobs, restore foreign exchange. It takes greater risks. But to be able to do that in a sustainable manner, you need the support. Most development banks are state-owned. You do have a few private ones, but they have to be well capitalized.
Okay.
Because you take risks, some projects will go wrong. And we have had that challenge over the past few years in terms of the investments that we have made.
Yeah.
Fortunately, for us over the past year, one of the things DFC has is a large influx of equity investment.
Okay.
Earlier in February, I think, or February, March of this year, the government invested over $32 million
Wow.
in the corporation. And it was an innovative, it was a debt swap, but it created the capital space for us to be able to assume greater risk, to take on additional debt and things like that. So we're a bit different in terms of how you get a loan. We don't take deposits. So, for example, we are not aware of if John comes to us today and says that he would like to set up a manufacturing a juice, for example, he'd like to manufacture juice. We don't have an account there for John. First of all, you're a startup. So that's a great risk. And you know what they say about startups. 50% of them fail. But yet you want us to invest with you, right? If you're not a startup, more than likely you don't have all the capital, you may not have the collateral requirements. But you have an idea. And you have a proposal that says that you can create 25 jobs, 15 of them women and things like that. That's what a country needs.
Yeah.
And so DFC is trying to fill that role at this time, especially where we are in a pandemic. I don't know if you want to.
I think you touched it well.
I'd like to talk more about the high risk aspect, because I can imagine being in the position and needing to vet projects or proposals from persons who may have a great idea. How do you balance moving forward with the development agenda and allowing for investment in what some may consider high risk without being reckless?
Okay. One of the things that DFC has instituted within the last, I think fully within the last 5 years, but more fully within the last 2 or 3 years, is our risk department.
Okay.
And that's at most financial institutions now. That's required coming out of the 2008 crisis. So we take risks, but we are not reckless in taking risks. We assess the risk. Like one of the greatest areas that we are looking at right now is climate risk and the impact it is having on this community. You would have heard the Prime Minister, I think, mention in his speech yesterday that we could be going well, and we have one adverse climate event, and it takes away all the progress that we have made. But apart from that, on an annual basis in the agricultural sector, which we have our largest investment, by the way, you care of droughts, then if the following year you have a flood, or you have drought and flood in 1 year,
Yes.
the crop is lost. So the $50,000 that the farmer borrowed to put inputs and into that crop is lost. They owe us $50,000. They have no income. What do we do? So what we are doing in terms of being, more taking more initiative in terms of how do we mitigate those risks? What factors do we put in place? We look at irrigation, for example, irrigation loans in the agricultural sector. So we do not, and that takes time, Marlene.
Yeah.
And a lot of persons complain, well, you take so long to do a loan. We may have a collateral, but the intent is not to sell your collateral. The intent is to build a business, create employment, create foreign exchange.
Yeah.
So we don't look at your collateral. A lot of time the collateral may not even be adequate.
Yeah.
But you see what the possibilities are and you invest.
Now, it's interesting when you think of I think you called it counter cycle.
Counter-cyclical. Yeah.
Counter-cyclical, how in a pandemic, the expectation is that development banks like yourself would come forward and fill a very important gap. But what was it like for your existing clients who perhaps saw a total decline in revenue and couldn't keep up with payments? How do you work with those who were put in that tough financial spot when we felt the economic effects of the pandemic?
Okay. One of the first things we did last year, when I think it was in March, we went to a board, and when we heard what was happening, and at that time we thought by September, October we would have been out of this pandemic. So one of the first things we did was to offer a moratorium on payments, principal and interest, to all our clients who we thought would have been affected by the pandemic.
Yeah.
It was offered to all, but you had to come in and apply for it. So if you could continue your payment, we encouraged you to, because we cannot forgive the interest. We didn't do any forgiveness or that. We just offered a moratorium. So that meant your interest continued to accrue.
Yeah.
In some sectors, it was only a 3-month moratorium up to June. But in the tourism sector, we offered up to October last year, because we figure if it's at June, if things get better by June, you go into slow season.
Yeah.
So it won't pick up until the high season. So we offered, and that was automatic. As I said, you had to come in and apply for it. But once you were in that sector, even student loans, people were affected. But we encourage persons and companies to come in and pay at least their interest, so whatever they could, so that the interest could not build up. I would say about 30% of those primarily in tourism sector remain in moratorium up to today. But I really have to applaud our clients. They have done, sometimes it's $50, $100 a month they come in so that they are able to service our loan. In fact, we had adjusted our collections downward in the pandemic, and we actually exceeded the revised projection. So that says, that bodes well for our clients. They're trying for the most part. We do have problems, but I would say most of our clients, you do have clients who, are irresponsible and do not pay.
Yeah.
I always tell my staff, I said, if we say we have a non-performing portfolio of 15%, yes, and a lot of them have problems, but it means 85% of our clients pay. So you have to look at it from the positive standpoint.
So We're mentioning here the pandemic, and we've seen a lot of people actually losing jobs at the onset. And you're right, especially in the tourism industry. But one of the things that we've seen, especially here on Open Your Eyes, we've featured a lot of new entrepreneurs, which we know are small businesses. But let's face the fact here, MSMEs are those who are actually providing the most jobs throughout our country. What can I do as somebody who is trying to get a startup? I want to get some financing. How do I approach DFC? What must I have?
Well, what we promote is collaboration. For example, we have in that sector, especially in the micro and small, we have an MOU with Beltrade. We have ideas, but you have to know how to run a business. Okay. And if you're going to get a loan, I would suggest that you learn how to run a business. So we start with that collaboration. But you come in, you have your business plan, and it doesn't have to be anything elaborate or sophisticated. What's your market? We were talking about there are new businesses coming up, like the Uber, the Belize Uber, and things like that. The chair and I were talking about it a while ago, and at DFC, we should be able to, and that's why these shows that you all showcase these businesses should be important. I sit down and watch them now because I would call and say, maybe we should check out that person, right? Because we go there. But they would bring in their plan, they show their market, they show their cost of operation. And once we feel that it's viable, and we also provide technical advice, we would say, you know what, well, maybe start smaller and build up and see how this goes along instead of going into a significant debt. So we do those, we do medium-sized lending, and we do lending to large, like the one you saw on the video with the cattle operation.
And let's get Chairman in and talk about this from an operational standpoint, because transparency is important in an institution like DFC, and it all comes with how the institution itself is managed. So let's talk about improvements made there.
Well, if you look at the history of the DFC, right? DFC had some issues, and then back in 2009, a new version of the DFC was launched. And if you would take the life to look at the governance structure in the Act, right? DFC has, I would say, world-class benchmark governance structure and policies. And we continue to work to improve those. So the new board has been in place since February, and we finalized the risk framework that the general manager was talking about, the policy for that. We also put in place the internal audit charter and all the framework for that. So you have a robust controlling mechanism internally. One of the big things that at the DFC we have to look at, and sometimes we get into issues with the customer experience, is the whole bit of know your customers. So we have to do the same sort of due diligence and screening as a commercial bank. So we have all the policies in place, and that's an area where we have to ensure that we hold the line. So we do those things. At the same time, though, we try to be creative. So if we go back to the conversation on COVID, right? The organization since COVID has given forbearance on about $40 million worth of loans. So that's significant. And for businesses who were affected by COVID, right? Our thing is we would not go to foreclose. So we look to find outside the box thinking. If we can restructure, right? We will look and sit down and find some ways to restructure the loan. We will have the patience, because as the GM said, our role is to ensure that we grow the economy of Belize. We especially looking at areas where you're either saving foreign exchange and growing foreign exchange. So those are some of the things that we have to continue to do, but we have a very rigorous DFC Act with all of the policies and procedures that we adhere to.
I'd imagine that when it comes to foreclosing, my question is, do you find yourself to be proactive or reactive? Because money talk in Belize is still very much taboo. Some people are comfortable coming in and saying, I can't pay. And there are others who kind of sit back and, pray that a miracle comes their way.
Yeah.
We do have some of those.
I know.
Some of them need a miracle.
Yeah.
And again, it's nothing specifically to do, but it's just the devastation that may have been caused by some event or something like that.
Yeah.
Are we proactive or reactive? We are in the middle, I would say, because no organization, I think, has the level of resources that is required to be fully proactive, as we would like to be. Our chief risk officer always says, because we do medium to long-term lending.
Okay.
So an average loan at DFC may be in excess of 10 years, right? You need staff to be able, and in the productive sector, 60% of our loans is in the productive sector, agriculture, tourism, small business, whatever. You need staff, and as the chairman says, the know-how to be able to monitor that business, to look into the future and see what are the cycles. The issue with climate change, I spoke with a farmer on Monday. I went out to his establishment, and he was telling me climate change has changed everything. They don't know exactly when to plant anymore. Yeah. And how we at the DFC, we have a climate champion. We saw it was so important that we have in-house what we refer to as climate champion. And so we are getting all the information in terms of how do you manage credit with the type of crisis that loom before us. Another thing that we are doing, we are getting accreditation directly to the Green Climate Fund. That process, it's a long process, started a couple of years ago, and hopefully it's concluded by 2022, the latest. But not only will we have access to financing, but we will have access to technical assistance to try to guide our farmers and in other industries, the tourism, the investors in the tourism industry. And so it's a win-win situation. No one, as I say, our last, especially me, and sometimes with my staff, I have to be back and forth. Our last thing is to take away somebody's collateral that they have put forward. That's not the aim of the DFC. If you come to us with a piece of land that's valued at $100,000, and you have the courage to make an investment, and something goes wrong, and you lose that land, you are worse off than when you started.
You're right.
We have to try to avoid that as much as possible. And as we say, we recognize that there will be losses, and things happen, but we try to minimize that.
So let me just, it's wonderful to hear that, and I think I guess it goes with the caveat that it's once they show that there's an effort to be able to return and
the business situation, right? We have to look at the risk and the business situation.
And I cannot underscore the importance of supporting the structure.
Excellent.
We are a state-owned organization, and if we are going to do these things, we need the support of the government. And we need it in tangible ways, and that's why the equity that was provided to us recently was important.
Exactly.
And that's what I wanted to talk about. I wanted to talk about how do you get, when you're in such a high-risk environment, there is equity coming in from government, but I know you also work with international development agencies as well. What's that balance like, and how much of it is a challenge to access capital?
Well, if I could touch on one part, we got about 32 million invested by government, and that injection, what it did, you have certain financial ratios that the IFIs look at to lend the DFC monies. So by making that capital injection, it immediately restored the balance in the DFC's ratios to allow the DFC to, for example, go to the IDB and get a $30 million facility. And I believe Taiwan might be providing another 10 million Belize dollars on that. And we are in discussions with CDB and SSB for another 22 million. So that injection allowed for doing that. I don't know, Jim, if you want to talk a little bit more about that. And then we are having new risk products, right, or ways to mitigate risk. So, for example, part of the strategic trust for DFC is to look at the whole climate change and getting to carbon neutral, right? Or getting to zero. So we're encouraging businesses to use solar and renewable energy and looking at energy efficiency. So we've just negotiated a thing called the CRAF, the Credit Risk Abatement Facility, that allows us to have like an insurance on those loans, so we could offer it at lower interest rates.
Yeah.
And at the same time, we could use the same equipment that you buy as the collateral. So those are some of the things we're doing. But maybe you could talk about those ones that we have coming in. And
Yeah, as the chairman said, the equity space that has been provided, one of the benefits is that we are able to access additional financing. One of the important aspects there is we were able to access lower cost financing. And so this IDB money is, I don't want to get into rates and things like that. You all heard it at the House meeting. But what we are trying to do at the DFC is to bring down the cost of financing, because that has been the cry from most of the target market that we had. The cost is too high. Understand though that, and I need to say this here, when you're working with a development bank, you won't necessarily get the lowest rate, but you may get affordable terms and conditions. Like, for example, a student who comes to DFC for a loan doesn't have to pay principal during the course of study. And is allowed 6 months to and only have to pay interest. So you get things like that, but there are risks associated with those.
Which, I really don't, because I know time is flying by, but I really don't want to lose the opportunity to talk about the promotion and the services or the products that you guys have got to offer. Because like you mentioned, Development Finance Corporation is about developing your nation. So let's talk about that.
Okay, the chairman referred to the monies that we are getting. We had this We Serve home loan, and that has taken off. That's primarily for public servants, teachers, military personnel, and staff of statutory bodies. And what it allowed them is improve cash flow. So we kind of bundled the debt and consolidated debt, and that program has really taken off. And housing loan may not be seen as productive sector, but it does balance the risk in your portfolio. So we've done well there. But now we are going out with our business loans to the small to MSME sectors, using the IDB financing. We have what we refer to as DFC focuses on inclusive financing too. So we're focusing on women. And our Empowered Business Loan, you'll see a couple of the recipients there benefit from the Empowered Business Loan. Allows them, and you up to $40,000 you can get without any real estate collateral. But you need to, there are other conditions that are needed. It needs assessment, right? So those are some of the products that we are looking at. We are participating in the central bank's special
purpose vehicle.
Maybe you could speak a little bit more about that, Chair.
Yeah, we have the special purpose vehicle that government has put through the central bank, and it has two components. It has a component for the MSMEs that the National Bank and the DFC are participating in. That's a facility of $1.5 million for small loans, up to like $15,000 for some of the businesses that has come about in terms of the pandemic time. And then there's a larger portion, about 50 million, that's there for the bigger projects and to assist businesses to restore them, businesses that were impacted by COVID. That's coming in at a lower interest rate. So that should allow the DFC and all the other institutions to be able to bring the rates down. One of the things from the board level that we're doing to look at the interest rates is to look at the whole the business model of the DFC, right? And with the management team, we're looking at restructuring certain things and bringing down our cost structure. So we had a operating efficiency of about 80%, right? And we want to get that down to within the 50% range. That will create some space to allow the DFC to be sustainable. Because remember, as a state-owned enterprise, right? When you talk about, for example, blue bonds and the national debt, we are featured right in there, right? We are what you call an explicit contingent liability. So we have to ensure, we at the DFC, the board has to ensure that we operate the DFC. Yes, we will take risk and everything else, but we can't be losing money, right? If we break even or we grow the portfolio, that's what we need to do.
Yeah.
So that work is on the way right now to be able to do that. And what we're aiming to do is to set the culture of the organization to be more performance-based, to create more opportunities for all of the professionals that we have there. So if you look at your business model and you ensure it's sustainable, then you know people jobs are secured and everything else, and then we can focus on doing the business of development. So those are some of the things that we're working on.
And I would like to add, we have to think going forward, we all have to contribute to building climate resiliency. I think that's going to be one of the big thrusts of the DFC going forward. Our leaders are out there trying to get funding. When the funding comes home, we have to utilize it. What's the use of having it if we're not going to utilize the funding? So for example, maybe in the next 2 or 3 years, we'll see Channel 5 with solar, and these are, we have to be a part of the solution. We have to be a part of the solution here. And DFC will, you know, get the resources, get the technical assistance for us to transform this economy into a climate resilient one.
I think you could mention, James, that all of the credit staff has already been trained.
Yes.
Yeah.
In every product they evaluate, or potential loans, it's evaluated looking at all of the climate.
Every loan.
Everything. So that all of that training has been happening over the past 2-3 years.
Led by our climate champion,
Right, led
Mr.
by
So
the
eventually
climate
that'll be part of your criteria.
Well,
Coming
we
with
are
it.
It's there now.
mainstreaming climate.
Yeah.
It means
Right.
that it in every aspect. So even in our student loans, we will probably incentivize students to be in the STEM subjects that is related to climate, more engineers and people like that who will be able. We don't have to go abroad to get the technical assistance. The technical assistance could be resident here. So it's in your housing loan, building more resilient houses. You remember, they probably had it right when we built our house on stilts. We
Yes.
probably have to go back to doing that.
That's now considered climate
That's part
smart.
of the change that we have to do. So your garage is at the bottom, but your house, and so when a flood comes, you don't have to be mopping up.
Yeah.
That's climate resilient.
Just quickly before we close, because the time has just raced by. I know that you were offering, or maybe you still are, the renewable energy loans that included the energy audit. We're talking about that way before we started talking about where we are now with the blue bonds. Do you feel that this has been accessed enough, or are there other products perhaps that people have been overlooking, not realizing that they can take advantage?
Yeah.
It has not been accessed enough, and I think it's a lack of awareness and understanding. And that's why, as the chair referred to, we are building capacity in-house in order to better sell this product. Because I think the product needs to be sold.
Yeah.
We need to
Indeed.
convince everyone that, you know what, you need to take this up. The investment, the upfront investment is a bit higher.
Yeah.
But we have to look at it like insurance. I always say we should be insurance salespersons
Yeah.
at the organization when
Yeah.
it comes to renewable energy and building climate resiliency.
It'll pay for
I
itself.
think that it will grow because we now have the craft, right? And that credit risk abatement facility will allow us to, as I said, price the loans cheaper, so they will be cheaper. There are also some regulations that holds back some of the investment in this area. So that's a macro issue that government has to address with regards to, all the regulations over electricity and things
Especially
like that.
solar,
Yeah.
Right. So that is part of what kind of holds back some of, launching that off. But if you look at the government's Plan Belize, it's right in there that will be addressed at some point. So, we're doing our part to get ready. The funding that we got through the IDB, I think 30% of that has to have a climate component with it.
Wow.
So the DFC is not only talking the talk, but we're walking the walk.
Walking the walk.
And-
And finally, if we need some more information on that, where do I go? Online is actually the new thing.
You can go online. We have offices in every tongue except Punta Gorda at this time. So you can, but we prefer, as we transition to a more efficient, you can make a call, but you can go online.
Right. And when you go on the website, the little chat bot opens
Yes.
up and you can You can do that.
Communicate through there.
And as we go along, we want to improve these. The chair spoke about our transition towards digitalization to a totally digitalized organization that will aid us in giving a more affordable and enhanced service.
All right. Well, now we know exactly what to do, and of course, you know exactly what to do. Business is not far-fetched. Check out the DFC. You'll get exactly what you need. All right. Thank you guys so very much. Natalie Goff, General Manager, DFC, thank you. And of course, Mr. Chairman, Henry Anderson, thank you as well for visiting this morning.